There's a lot of talk about Tesla only growing possibly just 10% next year. That's because Tony yesterday on TV said so. And that's because Tesla is not going to have new models, and that's because it is really just a car company. Gary Black calls out Tony. Tony is wrong and has been wrong on Tesla. And indeed, he has been really wrong before. The halo effect from Cybertruck and Model 3 Highland is reminiscent of 2020 and 2021 when Tesla volume soared 87% on the heels of interest sparked by the Model Y introduction. Add to that the $7,500 off invoice IRA tax credit combined with falling interest rates, and we are looking at 2024 year-over-year volume growth of 40%, predicts Gary. But Gary also just said this, where he predicts less than 40% year-over-year growth. Tesla bulls should reduce their expectations that Tesla volumes can grow at 50% per year. Gary is at 37% year-over-year growth in 2024. I am actually lower than that. I shared these numbers on my Patreon. And Wall Street is at 22% for next year. And apparently Martin Viecha, who is the head of Tesla's investment relations, recently advised investors that Tesla is now in an intermediate low growth period at a recent Deutsche Bank auto conference with institutional investors. 35 to 40% volume growth still translates to 35 to 40% earnings per share growth, which justifies a 60 to 70x PE, which would translate into a price target of about $260, says Gary. And Martin actually responded to Gary. What I said specifically is that we are between two major growth waves. The first driven by the Free Y platform since 2017, and the next one will be driven by the next generation vehicle, which is when I believe the growth will really come back. That's where we can see 50% year-over-year growth again, possibly. Tesla bull Bradford says 2024 looks like a gap year. I expect Tesla to struggle to get to 2.34 million in production and thus struggling to hit 30% for the year. This would represent over 45% growth from 2020 baseline. James thinks that 2024 will be a soft year growth-wise. Cybertruck will do 150,000, he predicts, so that brings us to 1.95 million. The new Model 3 will help stabilize average selling prices, but I don't think we will see much incremental volume growth, says James. The Model Y refresh won't come out until Q4, and IRA going point of sale will help. Maybe it will add 200,000 deliveries to the whole year. So James thinks that 2.2 to 2.3 million is reasonable for next year. I think we will likely have a lot more clarity how many deliveries Tesla will have next year after the Cybertruck delivery event. Currently, all we know pretty much is that the planned capacity is 250,000 units. Cybertruck could be the product to break Tesla out of this downtrend, which has continued now for a while. Tesla stock rejected these levels earlier in the summer. The downtrend for now still continues. We are still in the bear market, technically speaking, looking at this chart. So if Tesla's stock goes over roughly $270, that could be a pretty bullish sign, technically speaking, which could start the next big run. But if you have hiccups with the Cybertruck, I would expect the consolidation period to still continue. Tesla is posting more on X, and it says that the Model 3 rear-wheel drive is actually not only cheaper to own after 5 years and 60,000 miles than the Camry, Toyota Camry, but also cheaper than the Toyota Corolla. I bet though that most people don't know about this. So there's still quite a bit of room for sales to grow because people just don't know about this.